Well, the market got what it wanted with that Federal Reserve interest rate cut today. It's Wednesday, September 17th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell. You can share it with friends, family, or colleagues. But we're here today to break down the details that we got out of that Federal Reserve meeting. And as expected, the Federal Reserve cut interest rates for the first time since last September. And they cut interest rates by 25 basis points. And the expectation in their dot plots, or where they give their estimates for the Federal Reserve over future months, is for 2 more rate cuts of 25 basis points apiece this year. But let's look at the details. And this is where we break down the economic projections that the Federal Reserve gave. And we compare them to what they expected at their June meeting. So compared to June, they did upgrade their expectation for GDP both this year and next year. We're not going to focus too much on 27 and 28. Instead, we'll look at this year and next year. So their GDP estimate for 2025 was notched up from 1.4 to 1.6. And then next year, it also got upgraded from 1.6 to 1.8. Let's look at some of the other details. One of their mandates, the unemployment rate. They expect the unemployment rate to be 4.5%. This is the median estimate for this year. They downgraded the median estimates for next year from 4.5 to 4.4. So better GDP, lower unemployment rate. When it comes to the core PCE inflation, that remained unchanged from their June meeting. They expect the median estimate to be about 3.1% for this year, but they upgraded core inflation for next year from 2.4 to 2.6. So what do we take from that? It's a little confusing because not only did they upgrade growth, reduce their expectation from the unemployment rate, upgraded inflation, all compared to June, but then expect more interest rate cuts for this year and next year. And again, these are the median forecasts from the members. And I know there's some noise around a new Fed member who is very dovish coming on the committee. But still, look at the trajectory and the path here. It doesn't make a ton of sense. The one thing that Federal Reserve Powell said was that this is not an indication of consecutive interest rate cuts or hikes. They basically reminded us this is a meeting to meeting. The economic data is very fluid, but their risks now are more balanced. They see inflation as remaining elevated, but they just aren't quite sure what the tariff impact will be. They said it might be short term, it might not be. They don't know yet. They said the labor market is a concern, and we've noted that. So we do think it does warrant some modest tweaking. But these forecasts just don't make a ton of sense to me. In our opinion, inflation has improved substantially from where we were, but we're seeing the trajectory go the other way, and we're seeing inflation pressures start to tick up. If you get too dovish as a Federal Reserve chairman, or the investors, the markets take this rate cut as super dovish and they expect a bunch of more interest rate cuts, that can also fuel inflation. We've seen this story happen before. So we're a little cautious here. The markets rallied substantially, the equity markets, as soon as the announcement came out, but they did pull back, basically flat for the day on the S&P 500 and the NASDAQ, compared to after the press conference and after we absorbed some of those comments from the Fed chair. But you're seeing a little bit of a sell-off in interest rates, meaning interest rates are moving higher. And that's because the bond market is worried about inflation as well, and worried about what a dovish statement can do to inflation. Now, that's all that we have today. The last piece of economic data that we'll be back to talk about will be tomorrow, and that's the leading indicator index. Again, this hasn't really been as predictive of recessions or economic downturns as it has in the past, but it is a good way to look at a variety of different factors in the economy and the bond markets, really as far as seeing where we may see the future path of economic growth. Thank you very much. And if you like this podcast, please go to marketswithmegan.fm.